Hello everyone. Hope you are all doing well and good. Today our topic is stock market. So in this video I will explain everything from basics, very basics about stock market. So what is stock market? So how it's formed? So how to invest in stock market? So what are the rules in stock market? So every background procedure behind stock market I will explain clearly in this video. So stock market, every country has their own stock market. Even of our country, India has our stock market. So if you see stock market means stock market or share market or equity market, all are same. So in this stock market, we will buy or sell the shares of the company. Suppose there is a company called X company or any company. So if I am buying the shares of that company, means that I got some ownership on that company. Suppose I bought 5 shares of TCS, so I got that much percent. So the 5 shares, how much percent those 5 shares constitute the TCS, that much ownership I got in that company. So simply buying and selling of shares is nothing but buying the ownership of that company. So in this share market, we will do every investor will buy or sell the shares. So in other words, we are taking the ownership of that company on that percentage. So if I buy 5 shares, I can't say TCS is my company. I can't say that. But I can say I have some ownership on TCS because I own some shares of TCS. So that is the real meaning of buying a share of a company. I hope you understand on this point what is buying or selling a share in stock market. So suppose I bought a share. If the company got profit, then that profit will be divided as per the shareholding pattern, and I will also get the profit. Suppose if company got the loss, that loss will be divided as per the shareholding pattern, and I will also get the loss. So stock market, if you see the clear idea, I own a share of a company. If company is gets profit, I will get profit. If company gets loss, I will get loss. As simple as that. And my friends, if you know stock market, in India, Bombay Stock Exchange was founded in the year 1875, but in informal stock market, not a formal stock market, informal stock market was started 400 years ago by the Dutch East India Company. So I will explain what is the informal stock market and how it started by Dutch East India Company. So during the times 400 years back means during the 17th century, in the year 1600s, all those things. At that time, the Dutch East India Company, English East India Company, so they used to explore the world on boats, on ships. So they need money, they need resources. See, I need to build. Suppose I am in Europe. I want to explore the northern part, or I want to explore the southern part. I want to explore the western part. So to explore all these places, first of all, I need resources. I need to construct new boats, new ship. I need to build the machinery required for that. I need so many resources, but I don't have enough money. So the Dutch East India Company, they came up with an idea. So the idea is, with the locals, wherever they are present, with the locals, they asked, please give some money of you. So with that money, we will build whatever resources we need, and we will go exploration. So in that exploration, we will take the things from that place and we'll bring back to you, and we will share with you based on the money you gave. So please give me money, I will do exploration, and I will get something for you. So this is the deal between the Dutch East India Company and the people who they interacted in their local place. So some people gave money. Suppose I gave money to a ship Captain Robert. I give so much money. But Robert went to exploration and he didn't return back. All my money is gone. So then they understood, they learned that if I invest on single ship, there is a high chance that all my money is gone. So people started investing on multiple ships. So for example, I invested in 12 ships, 3 ships gone, remaining 9 ships came back. So I will get money from those 9 ships. See, this is the stock market idea 400 years ago. So nowadays we got a systemized, legalized, organized stock market. But I'm talking about how this idea originated 400 years back through this Dutch East India Company. You understood, right? So this is how they made a deal with the locals, the Dutch East India Company, and they became very rich. The people become rich. Dutch East India Company, English East India Company, they become very rich. So this is the idea of stock market 400 years back. So company became rich. Now we will come to our point. Stock market. So as I mentioned earlier, every country has its own stock market in US or in Japan or in China or in European countries. So every country has their own stock exchange. So in India, we have our own stock market. We have our stock building. So there are two stock exchanges in India. One is BSE and another one is NSE. If you see the screen, one is BSE and another one is NSE. So BSE means Bombay Stock Exchange. NSE means National Stock Exchange. So this BSE has 5,400 companies, whereas this NSE has 1,700 companies. Okay. So here, now in the market, there are two types of market. One is primary market, another one is secondary market. I will explain. So primary market means suppose I want to start a company. So I will issue the shares. Those shares are nothing but primary market. Whatever the company that is selling those shares, that is called primary market. Suppose I started a company, the demand is very high, then my value of the share will be as per the demand. So I will issue suppose 1,000 shares into the market. All shares will have equal amount, and all shares rate, how much the share value will be dependent on the demand of the share. So that is called as primary market. Whatever the shares company is issuing into the market, company is injecting into the market, that is nothing but primary market. Okay, so I will issue the shares. How many shares I will issue? Suppose I am the CEO, I will issue all. I don't issue all the shares into the market. Then I will become what? So as a CEO, I will own at least 51% of the shares to make the decisions under my control. Remaining shares I will inject into the market. Suppose Mark Zuckerberg is there, he is the CEO of Meta, so he will keep the 51% of ownership under his control so that he can take the decisions as per his decision, his business. Remaining 49% he can inject into the market. So where those shares will be available for all retailers, any persons. So that is how the companies will inject the shares into the market so that they will get the money from the people and they can expand their companies. So secondary market where people sell and buy the shares among themselves. Suppose I bought a share IRFC at 10 rupees, the share become 20 rupees. Then I will sell it. So other person who if the share has demand, other person who wants to buy 20, he will buy the share. So this is how the interchanging of the shares between the retailers in the market, that is nothing but secondary market. So I hope you understood, right, what is primary market and what is secondary market. Then to measure this stock market, we have two indices in India. One is Sensex, another one is Nifty. So Sensex means sensitivity index. So it belongs to, I told, right, Bombay Stock Exchange. So it belongs to Bombay Stock Exchange. It will take the top 30 companies of Bombay Stock Exchange and it will measure the performance of those 30 top 30 companies, and it will give an index. Somehow long 1875, it somehow calculated and gave it a number. So it started at a random number. That number keeps on increasing over the years, and now it is, if you see the Sensex index, now it is 82,269. So Sensex is the measure. How to measure the market? There are some indices. Out of them, Sensex is one. It belongs to Bombay Stock Exchange. It will take the top 30 companies of the Bombay Stock Exchange, and it will give a random number at the start during 1975, and the number keeps on increasing or decreasing. So based on the performance of those top 30 companies under the Bombay Stock Exchange, that is a Sensex, that is the index. There is one more index. See, before telling that, you can see Sensex graph. So how it is 1981, how it is 1991 and 1995. So it keeps on increasing. So if you see in the red mark, during the 2009, there is a huge drop. That is global recession time. So market responds like that. Sensex measures the performance of the companies through this index, Sensex index. And another one is called Nifty. Nifty means National Plus 50. Just like Sensex for Bombay Stock Exchange, Nifty is for National Stock Exchange. So it will take the account into top 50 companies of National Stock Exchange. That's why it's called as Nifty 50. Okay, so that is the two indices of the Indian stock market. So suppose now I will give an example. I want to start a company. The company is, I want to start a coat company. The name of the company is Deluxe Coats. So now I want to expand my company. I want money. I don't have enough money. So what I will do? I will issue shares, buy these shares. Who will buy? So first of all, I need to establish my company, right? The company should have all the rules. I'll explain later. But so to launch the company, I need to launch my company under stock exchange so that my shares will be available to the public. That is nothing but that launching is called IPO, initial public offer. So I am starting a company. I am injecting shares into market. Please buy these shares. First time, the injection of shares. That is nothing but public listing, and that is I am whatever I am issuing in the public, that is called as IPO, initial public offer. You understood, right? So anyone can issue IPOs? No. So previously, when stock market evolved, so many fake companies, they registered a company and take the money from the public and they went away. See, that is, we have seen so many scams. India's biggest scam, Harshad Mehta scam. I will make a separate video if you want about Harshad Mehta scam. But it is one of the scams where there are shell companies, they registered and took the money of the people and they went away. And even Satyam scam. So he also took the money of the investors and ran away. So these are the huge scams where they played with stock market. So after seeing this, a new body formed to regulate the stock market, the fake companies, to regulate the fake companies and to identify them and to take the actions. A new body, statutory body formed. It's called as SEBI, Securities and Exchange Board of India. That is SEBI. So SEBI will thoroughly investigate the company's track record, company's resources, companies, the financials. SEBI officials will check with companies auditors. So SEBI will form some rules and regulations. These are the rules and regulations required if you want to enlist your company on the stock exchange. If the companies they don't eligible, they SEBI will see whether the company is eligible or not. If they eligible, they will put this company. SEBI will put this company on the stock exchange. Otherwise, SEBI will remove it. So this is how SEBI learned the lessons from the past. See, before internet, there is the stock market. We need to go into the building and we need to buy the shares. And before internet and before there is a no regulation process, any company will go to a stock exchange and register the name and take the money from the public and do whatever they want. Those are the scams. So SEBI is nowadays regulating every company, whatever the company financials, what are the companies that are following our rules or not. Based on that, SEBI is permitting. Once company is registered, also SEBI won't leave them. SEBI will see regularly their performance. Are there any wrongdoings they are doing? So SEBI will check everything. So that's the SEBI. That's how SEBI is, to be frank, the heart of stock market right away. So now I am there. I'm a normal individual, Aam Aadmi. I want to buy shares. So as I mentioned before internet, I need to go to Mumbai, or I need to call some dealers in the Mumbai. I need to transfer the money. They will buy on my behalf. But after internet, we are now buying stocks in our mobile. So to buy shares from your home, we need two accounts. One is bank account, another is demat account. So what is bank account? What is demat account? Bank account is to transfer money from your bank to the company. So for transfer of company. So I am transferring my money from my bank to the company TCS. I want 5 shares. Each share value 3,000 rupees. 5 into 3,000, 15,000 rupees. 15,000 rupees I will send from my bank account to the company account. Once company receives the amount, they will transfer 5 shares. So you can't store shares in your bank account. I'm absolutely right. So you store those shares in your demat account. So nowadays banks are itself giving. So for your bank account, I will give you all. Your account will have bank account, demat account, all in one. So every person who wants to buy shares online, they must have a bank account and a demat account. So we are retail investors. We are not institutional investors. We are retail investors. So I want to buy shares. So where to buy shares? There is no application, TCS app. I need to buy shares in TCS app. I need to buy shares in Infosys app. Not like that. There are stock brokers like Zerodha, Grow, Angel One, like that. There are some stock brokers. We need to install those apps or we need to go their websites and we need to place the order. These stock brokers will be acting as intermediaries, mediators between the investors and the company. So that's why these are called as stock brokers. This Zerodha and Grow, all those things. And see in this slide here are the top 10 stock brokers: Zerodha, Angel Broking, Kotak, Axis, iGrow. All these are examples of stock brokers. And now, big question: what is investing and what is trading? Though, friends, I put 10 rupees in a stock, and I want for a long term, not immediately. So the 10 rupees may become 100 rupees. Then you can take that out and you can invest on yourself. You can buy whatever you want. That is investing. Whereas trading, I will buy 1 lakh of shares today. Once 1 lakh of, see, I am buying huge capital, right? The amount will increase within a short time or decrease. And once the amount increases, I will sell those shares within the day itself. Short term, very short term, and only for profits on the same day. That is called as trading. So there is a difference between investing and trading. And even now there is a futures and options, which is also kind of very, very risky. And investing, once you invest in a stake, you can take the money back once the share gives you profit. That is investing. From this, I got one question: is stock market, share market, gambling? Friends, to be frank, I'll answer you in a clear manner. It's not gambling. Suppose there is a company, a fancy company. So once the company is launched into the market, I need to study the company. If I think the company has no debts, if the company is giving profits, if the company leadership is good, If the company is huge potential in the future, then I will invest in that company and I will wait for my profit and I will take it. That is not a gambling, that is a study. Suppose a company is launched, people are going crazy. I want to buy this car, about to invest this. I don't know anything about this company, but I bought it because of other people seeing that. So I don't know anything about company. Then it is a gambling. The company may give you profit or it may give you loss because you haven't studied about the company. So in a short summary, I can say that share market is not gambling for those who study the market. Share market is the gambling for those who don't know anything about market and they invest blindly. So I am leaving this answer up to you. Suppose, so I don't have any share market knowledge. I don't have any company's knowledge. What I need to do? Then use mutual funds. I will make a separate video if you want on mutual funds. So mutual funds there are so many types of mutual funds. So what mutual fund will do, right? They have some mutual funds invest those money in the stocks. But mutual funds authorities, whatever mutual fund, they will study the stocks and they will invest the stocks in a good manner. So at least if you don't know, if you don't have any knowledge on stocks, which stocks to buy, at least invest in mutual funds, a good mutual fund. They will invest in good stocks. So in such a way that mutual funds are less risky when compared to stocks, but mutual funds will give you very decent growth when compared to a fixed deposit or any other stocks. So this is a brief introduction about stock market. I hope I gave you clear insights on this. What is stock market and how it started? So what is India stock market? What are the we have two exchanges and what are the indexes that measure the stock market, and how to buy and sell the stock market through demat account. I also explained about stock brokers, and I also explained how stock market can be gambling or not, and I gave you the idea about mutual funds. Friends, if you find this video useful, please subscribe and follow me. I will give you more and more good content useful for you. If you have any suggestions, you can give me, you can comment out. If you have any new topics you want to discuss, put the topics in me. I will prepare and I will give you the topic knowledge. So thank you so much. I wish you all the best for everyone's great future. Thank you. Dhanyawad.